Hi everyone, welcome. Super excited for this panel. We're going to be talking about crypto payments. I'm Camila, the founder of The Defiant, the best source for DeFi news. Sinan here, co-founder of BiLira, the issuer of a stablecoin index to the Turkish lira. Rick, co-founder of Decaf, a non-custodial app running on Solana and Stellar to seamlessly integrate to DeFi. Dr. Jeannot, is that the right pronunciation?
Cedric is good enough.
Co-founder of BeMobileAfrica, to allow people in Africa to send, receive, and convert crypto and money globally. And Vidor, founder of Solflare, non-custodial Solana wallet. So super excited to have you all here on the panel. So crypto payments was really the OG crypto use case. That's really what Bitcoin was made for, a peer-to-peer cash system. But arguably, it hasn't been the main use case that crypto is, actually known for, or where most activity is concentrated. Most people are using crypto to trade and invest rather than for payments. So first, if we can just start by, why do you guys think that crypto should be used for payments? Like, why would it be better than traditional financial rails? And maybe, Sinan, you can start and we can go.
Of course. Hello, everyone. Welcome to Istanbul, our hometown. So we're building a Turkish lira-backed stablecoin, and we help with fiat on-ramp, off-ramp solutions, and we're a market maker as well. And actually, crypto payments and stablecoin payments is very important because it takes the power from the gatekeepers, which are the banks. And to give live examples, today, if you buy something here at the conference with your credit card, it charges the processor around 3%. But with stablecoins, we managed to lower this to 10 bips. And what happens is the bank usually starts their number at 0.6 or 0.8, and then there's a payment provider coming on top, which is the processing company, which puts 1 or 2% depending on the volume they have. And stablecoins actually have the option to take this away from the banks and creating a bridge directly from the users to the merchants by using the blockchain wallets.
What do you think, Rick?
Yeah, so I think, to answer your question, why is payments really important with crypto? So crypto is the first money that is completely global first. So you rightly point out that when you spend, you have like fees for cards, like 3%. But imagine you want to pay for something that's across a border, like in another country. Now, the fees are infinitely more. It's way more difficult. You're involving way more currencies and types of money owned by sovereign governments, and it's extremely difficult. Crypto is the first thing that is doesn't even see borders. So now we can exchange this form of money, crypto, for goods and services wherever and however, without fees and without borders. And I think it's, one of the promises of Bitcoin, and I think it's so important that we achieve that goal because it's fairer and better for everyone.
Yeah, so in the context of Africa, we run a neobank focused on low income. So what we do is financial inclusion, unbanked, underbanked. So we are usually the very first bank account that people will get. Keep in mind that Africa is a very big continent. It's 54 different countries. 40 plus currencies. The primary use case in the African market, especially in our segment, the low income, is transactional. If you're in Istanbul, if you're in the Western world, you have a payment network. You have the infrastructure, financial infrastructure that people use. You have cards. In many of the African countries, that does not exist. So the reason people use crypto or blockchain or any kind of other rails is just because it's a way to exchange value. If they had infrastructure like you have in Europe or in the US, nobody will use it, but right now there's just no solution. And a lot of the use case that hasn't been really covered by the banking system is the intra-Africa remittances. There's a lot of countries in Africa where Africans from other countries work. So sending money from, I don't know, the US to Nigeria, you'll find a lot of options. But if you try to send money from Mozambique to Cote d'Ivoire, it's almost impossible. And so that's where the blockchain use case, and especially Solana, because it's very well suited for payment and low amounts, becomes very, very prominent. So in Africa context, payment is really about exchanging value and not really an investment use case where I'm buying hoping it will be more. I'm just trying to transact with someone else in a different border and there's no rails in between.
Yeah, well, I can only echo what everyone here said. I think we covered the most important things, moving amounts of money with almost negligible fees across the globe. And this is something that Solana does pretty well these days. Another really important aspect that we shouldn't miss is self-custody. So Cedric May said that you're the first bank that you're getting, people in Africa, but I think like the first bank that people are getting is as simple as opening a wallet. So self-custody is something that I think plays a crucial role in payments. Obviously, it's much easier sometimes to just onboard to a bank, maybe put some of that trust into a bank, or even like not take the responsibility. But the ultimate responsibility comes from self-custody, and whoever practices self-custody, stores their own keys, holds their own crypto, is in their ultimate control at the end of the day. And I also understand the like need to say, okay, MasterCard takes 1%, 2%, 3%, but crypto takes 0. And at the end of the day, as you said, like there's not the whole world uses MasterCard, or not the whole world has like POS infrastructure. It's sometimes, as Camila said, it's like a lot of the world uses crypto for investing and trading, but I would sort of disagree with that. I think a lot of people, especially in like some oppressed regimes around the world, use crypto because it's their lifeline. Self-custody is something that enables their day-to-day life to not to be robbed or anything else. So all of that combined, I think, creates crypto and like stable coins and the whole deal like a really good use case for future payments.
So we've talked about how crypto and blockchain networks are really best suited for payments because it's a global network, doesn't care where you are, it's permissionless. All you have to have is an internet connection in order to access these financial services. I think it also provides access to maybe stable currencies in countries where the local currency is very volatile. It enables self-custody, or actually owning your bank account or your wallet and your assets. And of course, what blockchains are specialized in is cutting out intermediaries, which means you're able to transact at much lower fees. Especially in a blockchain like Solana. So if all of this is true, and I agree that some people are using crypto for transfer and payments, but the stats show that most of the activity is for trading. Most volume, even with stable coins, like people use stable coins to come in and out of crypto to trade. What's missing to get payments, cross-border transfers, and so on to really become a more important use case or a higher volume use case within crypto? Like why is it secondary to trading so far? And maybe we can start this time with you, Vidor.
So that's a really good question. First of all, I think there's a lot of distraction in crypto. So there's NFTs one year, there's meme coins the other year, there's so-and-so, and it sort of diverts the focus from the core technology and what it enables to something totally like value extracting. Most of especially like Western countries, as you said, like use crypto for like investment and speculation, and there's not much incentive to like focus fully on payments. The thing is, like crypto is like really seasonal. One year it's up, the other year it's down, and one year NFTs are popular, the other ones, I mean, the other year they aren't. So I think we, like together as an industry, need to focus more on some of the fundamentals, but not some of the like crypto ethos fundamentals, because I think they're essentially inhibiting the growth of crypto. If we would like be put in a place to like think of new fundamentals that would focus on utility, that would focus on use cases, that would focus on exposing this like blockchain and crypto technology to the wider masses, we will be much successful in that. Until then, we'll just be trading dog with cat.
Yeah, I think you're right. If you look at the stats, it seems that trading is big, but I think context matters. So if you are a hedge fund and you're trading, you know, hundreds of millions of dollars, of course it creates a lot of volume because you can cycle a lot of money often. While in Africa, someone sending money to their family is going to be like $50 US equivalent or $100. So the amounts are a lot smaller, but you also have to understand that in emerging market, the crypto rails will become the de facto rails. So if you give it enough time, I mean, we got 1.56 billion people in Africa, and it's going to get to 2 billion very, very soon. That is what people use. So once lending is there, saving is there, everything is there, then you can see there will be way more activity. But right now, if you compare to emerging market, the dollars amount are way, way smaller. So if we move like, I don't know, $25 million a month, it doesn't seem that big in some context, but if you look at what it means for local and how many families and villages are impacted, it's millions. So the context really does play a role when you're in emerging market.
Yeah, I want to say something here. I think the attention a lot goes to the US and what's happening there, and the context does matter. We're sitting here today in Turkey. I'm looking out in this crowd and I see Colombians, Mexicans, team from Sierra Leone. I know that this crowd is going to understand when I say there is a whole community of people using crypto for real world utility. Like right here today, we need more spotlight onto this. There's literally a OTC shop across the street where people are cashing in right now. I see the messages going in on my phone where they're putting their USDT in, they're getting Turkish lira out. Like that's real world utility. This is already happening. We just need it to be in the spotlight. I'm going to bring up a story of what we see with our wallet in Colombia right now. Last week, working with a team in the Define, actually, we were seeing payments going to a remote village in the Colombian mountains. This village was fascinating because they're getting payments from the US. It's going into USDC, paying out all the employees in their non-custodial wallet, and they're cashing out to Colombian pesos in the local MoneyGram, using the Decaf wallet, in the middle of like the Colombian mountains. And this has a really dark history, only 6,000 people there. And they're able to get work, they're able to have this, they're saving their money in dollars, and they're able to cash out when they need it to protect themselves from inflation. And it's changing lives. In fact, we did interviews with them, and they're saying it's allowing them to reach dreams that they've always had but never been able to achieve. Getting work, and it's mostly women in these mountains, and they're able to save money for their children to go to university. They're able to support their families. This is happening now. I saw it with my own eyes, and it's changing people's lives. And people say, oh, blockchain is a technology looking to solve a problem. No, it's solving real problems. In fact, before this solution of non-custodial wallets, they were delivering cash, and the employer, he got shot. He actually got killed carrying cash from taking out at a bank because it was too dangerous. And now he can deliver that all digitally through non-custodial wallets. They can all cash out. They all get jobs. This is real-world utility. This is happening in Colombia. I think the whole question just needs to be, we just need to focus on these stories. We need to focus on the areas that has real-world utility because that's actually the biggest story here.
Yes, agreed on that. So in Turkey, Turkish lira was very inflationary in these last couple of years. So it created a real world use case for people to move into USD stables in Turkey. So there's a big price difference for retail if you want to buy US dollars in a bank. There's usually a 1% spread, and there's not much enough liquidity. And on the crypto order books, there's actually, if you want to buy a USD stable, it's much cheaper than buying from a bank. And then there were some limits on buying and sending and stuff, so it also solved the international remittance problem. So in inflationary countries, people are always looking for a way to move into a reserve currency, and actually stable coins tailor this need in a very good manner. And I would say in these last 6 months to a year, Turkish people were very happy to have these both cash to crypto OTC desks and the local Turkish exchanges to be able to move into USD stables.
So you've all talked about how crypto is already being used for real-world use cases, especially in emerging markets, developing nations, and you've given some really inspiring examples on how it's changing people's lives and allowing people to transfer money, to keep savings, so I think payments and transfers in crypto make sense everywhere. Like, it's just better technology, but it especially makes sense where there is a lack of financial rails and financial services. So how can we simplify onboarding for those communities who, maybe don't even know that this solution exists, or maybe the technicalities of it are a little bit difficult? What are some of the challenges you're seeing, and how to solve these just onboarding challenges? And maybe we can start with you.
Of course. So in Turkey, currently there's no regulation for crypto, but there's going to be two different ways for it. So the first one is going to be centralized exchanges that's regulated and which accept fiat currency from local banks and have a full KYC AML procedure. And then the second one is going to be these cash to OTC desks, which again do the KYC AML options, but then you don't need a bank account, and you just need cash to be able to be onboarded. So if you just download a non-custodial wallet, and if you have cash on hand, now you are part of this ecosystem, and you can move your money around, and now basically you're banked. And when regulation comes, for instance, you're going to be able to earn interest on your Turkish lira stablecoin. Mm-hmm. And today the interest rate is 50%, but when you compound it's around 60%. So if a Turkish user doesn't have a bank account, but they have Turkish lira on their hand, then they're losing a lot of value to inflation. But once these yield-bearing stablecoins can enter with regulation, now with a cash shop and a decentralized wallet, you'll be able to earn that interest rate without opening a lengthy bank application process.
Yeah. We think that financial inclusion will happen on-chain. Because, for example, anyone can have a non-custodial wallet from anywhere, and that can function as a bank account. So I think the innovation, or the interesting thing about Solana, it's so efficient as a chain with gas fees and how fast it is. It's the first time that you can have a good user experience as a bank account, really. So imagine it's so fast and cheap that your non-custodial wallet is just as a good of an experience as a centralized exchange or a bank. This can be achieved with Solana. So I think we're at a really interesting time where the user experience to onboard 1 billion people is now here. We can do that for the first time, I think, in history. And the next element of getting those next 1 billion people is, okay, well, now we have the chain that can really create a user experience, but what about on-ramping? How do we get people actually crypto into their wallet? And that's like the next challenge, where you have like teams like BiLira, or you have OTC desks, or you have really good ramps that are just efficient and really good and can KYC as many people, or just KYC is a confusing term, but yeah, just get as many people into the ecosystem as possible with crypto. That's those two elements. If we can solve that, which I think we are, making really huge leaps and bounds in this space, that's when everything changes. We bring on that next billion people.
Yeah, so for us, actually, our digital bank is fully built on Solana. So if I give you the contract address, you can see all the transaction, but our users don't even know it. It's fully embedded because we had to make the user experience so easy for people. Keep in mind that we're dealing with people who may not have any technology used before, may just get their very first smartphone, have what I call technology fear. So I'll give you an example. Usually you get your salary in cash, okay, fine. When some of the salaries went to our own accounts, payday, Friday, end of the month, everybody goes to the post office, get the cash out, count the cash, put it back in. Because once again, it's not that they don't trust it, but they're just not used to it. So you have a lot of things that you have to make it easy. In our case, you can do international transfer intra-Africa. So you can move money in 30 countries in Africa, real time, no cost. And you can move it just with your face. So if you don't know how to read and write, you just put your face on the screen and scan your payment accepted. Mm-hmm. So we had to build user experience things that was relevant to the local population. When you mention on-off ramping, if you don't have on-off ramping, then you have a really good piece of technology that nobody can use. So you have to localize per market. Okay, in this country, we're going to go with the total gas station because in this country, there's a total gas station that has cash and give it to you. In this other country like Kenya, you have an M-Pesa, or you have some mobile telecom stuff that you can use because people have that. In South Africa, sure, you can put it on a bank account because some people have bank account. You have to localize, but you have to make it so easy that people essentially are not, it's not a friction, there's no onboarding, they just can naturally do it, and then you start seeing adoption curves. In our case, I mean, we were not perfect. We had to go through multiple iterations. We were lucky because people had no solution, so they had to use us. But eventually, you get to a product that is very good.
Yeah. So to answer your question, how do we get crypto payments to the next billion users? I think right now, I mean, looking at this conference and looking at what happens in the world and with some like really inspiring examples, we're witness of what I would call crypto and payments product market fit. So I would say that everyone that needs crypto for payments had a way or has a way to find out about how they onboarded themselves to crypto. Either it being like on-ramp or like credit card or anything. I think people who really had the dying need to use crypto are using crypto. Obviously, looking at that has some sort of a ceiling that we need to work towards like breaking. The way I see that ceiling being broken is that like 10, 15 years ago, we had legacy banks being built on legacy infrastructure. Last 5 or 6 years, we have these like neobanks, which is like really nice user interfaces that are built on legacy infrastructure. That's essentially not working. It's like nice skin. How I see that ceiling being broken is we take it as like really nice skin, really nice user interface, and plug in something that would represent the new underpinning of a new financial system, which in our case right now is Solana. Solana is really high throughput, really low fees. You all know what Solana is. And I think when we package that product in a way that it solves a user problem, it creates new moments. When you open the app, there's no KYC to get in, no KYC to get out in terms of like receiving and sending crypto. And when you see an app or a product that solves your problem essentially, without even the requirement to know anything about technology, self-custody keys, I think that's how we break the first ceiling to mass adoption.
So what are some of the innovations that you're seeing now that you're excited about in the payments sector in crypto that can maybe unlock some of the challenges that you've discussed? I mean, maybe the user experience can be improved so people don't have to think about seed phrases or paying for gas, or maybe the KYC process can be smoother. Yeah, what are some of the innovations you're seeing that can kind of improve the experience? Yeah.
Okay, so for the payment industry, there's usually some amount sitting idle in the wallet while waiting for payments or between payments. And now with the introduction of tokenized T-bills and tokenized money funds, it's going to be very interesting to have these stable coins while they're sitting in the wallet idle to be able to earn interest rate and to become interchangeable between these assets and the fiat stable coins while actually doing a payment. So I believe that's going to be the next wave for crypto payments. But for that, of course, regulation and clarity is very important. But I think it's going to be a big unlock for everyone and for utilizing those assets for the retail users.
Yeah.
That's a great point. For us at Decaf, we're trying to make a non-custodial wallet feel like a neobank. We saw the last fintech wave, you know, with the new banks, with the Revoluts, with the Wise, with the Venmo, this sort of wave in the last maybe decade. People are familiar with that. It's just a great digital experience. We're not there yet with crypto. This is what we're trying to do. So I think, you know, this, if we're able to replicate this, make something that's really familiar in terms of user experience, but then get all the benefits of being on chain. We're able to trade treasuries. It's a transactional currency, but it's earning us yield. That's not possible in traditional banking. You can't have a savings account that is your transactional account. And so this is like a really new concept and a really cool innovation that is not possible in traditional banking. That's an edge. And then we can have, you know, DEX trading and all the brilliant things that you can do on chain and the borderless nature of it. So, you know, what if we could get, let me put it to everyone, what if we had an experience that was as good as Wise or Revolut and it was available to everyone and had all the benefits on chain? This is what we want to see. This is what we want to bring into this world. And I think that's how we win in this fintech race.
So for us, KYC, we've solved that. We are regulated, I like to say heavily regulated, so we had to solve that a long time ago. But one of the things that, once again, possible on Solana will be very difficult to do somewhere else, that we've just launched in South Africa is it's called earned wages access. So people work and they usually get paid at the end of the month. And sometimes, you know, you're short on cash flow mid-month and you go see a loan shark. So let's say in South Africa, if you go get money on the 15th until the end of the month for 2 weeks, you're going to pay 60% interest rate, 60 for 2 weeks. But that's just a reality, and people have to deal with that. And now, because we own our own payment system, which is based on Solana, every day I can deposit your salary, fraction of your salary. So 30 days in a month, you get 130 US every day. So instead of waiting till the end of the month, now the money arrives. So your cash flow helps. You don't need to go borrow, you know. And so because Solana is, the throughput is so good, we can actually push a lot of the payroll system in South Africa through that, which really saves a lot of people money because they don't have to go get, you know, very high interest loans. And this will not have been able, you just can't do that on the traditional financial system because the rails will be like so old that it doesn't work. And for that, we will charge 3%, which compared to 60, so 120 a month, 3% is very, very cheap. But for us as a bank, it's 36% return on capital. So it's a very good use case on how blockchain will create value for the user, for us as a company, and for the employer, because of course they take care of the employer. So this is one of the use cases I'm pretty pumped about, and then we'll scale this to other countries.
Yeah. I think the best way to sort of eliminate friction is by eliminate parts that provide friction. So when we talk about, okay, you have some crypto, you earn some money, you got some USDC, you need to off-ramp, you sort of want to buy something on the internet, you then need to like take that, top up your bank card, and you spend that card with your, use that card on like any website. And I don't think that's the ideal flow. Today in Solflare, people hold tens of billions of dollars, and they want to spend it. So I think what's important is to let them do it and let them engage with a product that also Rick sort of insinuated towards, like mentioned, is like a really nicely shaped product that lets you do everything that a bank would let you do without it being a bank, without it being underpinned with this new technology that's sort of revolutionary and enables a lot of new things. Regulation and KYC will obviously, to some extent, be necessary, but I think crypto shouldn't have a bad name. We aren't doing illegal things. We're here to make noble use cases off of it, and I think we're on a really good path towards it.
Awesome. This was an amazing panel talking about real-world use cases for crypto, things really changing people's lives, and how we are stripping the old financial rails and exchanging them for new, better ones. So thank you all so much. This was great, and thank you all for coming.